All right, folks. Good morning. All right, so let's begin. First things first, let's look over what happened yesterday. Now, of course, GigaCloud GCT was one of the stocks that was mentioned yesterday. I just wanted to go over what ended up happening. Okay. So, a quick review of yesterday's action. Remember before the opening, before the pre-market, I mentioned that this was one of the stocks. This will be the primary one to watch. There were others, of course, that were mentioned as well, but this was the one that I thought would be the one that we should watch the most. Now, there was another stock that started moving shortly after the start of the market, which I also pointed out, which I'll go over in just a second. Okay, so let's just look at the action here, get a sense of what happened. Okay, so at the gap up, we faded lower at first. Then we found some support. Now, if those of you who remember, I specifically mentioned where to look for entries. Now, I mentioned that in this case, the first entry point should be somewhere up here. It was around 640 because the stock at the time was moving up, and you don't know if it's going to pull back or not. So at the first minute or so, first couple of minutes or so, it's hard to say where your ideal entry point would be because there's not enough history for the day to judge that. So this roughly where I just drew that line would have been approximately where your first entry point should have been, somewhere around there. Your second one I specifically mentioned would be around 580. That did not actually get down to 580. It went down to 581, right? So the idea was to average a price in between these 2 points, which will put you somewhere around here. Okay, I'll go a little higher just to, in case you got in a little higher. But the point is, you should have had an average price somewhere around this middle line, right? Somewhere around here. So I'll make it a yellow line. Okay, so that would be your logical average price entry that you probably would have gotten. Okay. So after the pullback, okay, it did not get down to 580, it got close. But I did say roughly there. So if you decide that, maybe I'll just get in a little earlier, that would have been fine too. But it did turn around and start to go up. Now that number, the way I got that 580 number yesterday was I was looking at the VWAP, first standard deviation, which at the time was a little tighter than it is, but you can kind of see a little peak, a little spike. I'm trying to see if I can zoom into it right there. It was roughly around there that I saw, like, okay, it starts to come down. So that was the first, for that first few minutes, the first 5 minutes, since I did have it on a 5-minute setting, I was looking for that roughly to be where it's pulling back to. Now, guys, there's never an exact science on this. I know that everybody wants to know exactly, like, to the penny where they should be buying in. It's never going to be like that. You're going to always have to have a rough guess. So this is one of the reasons why I prefer splitting orders into more than one part. Now, I did 2 because it's easier to explain. But if you had 3 orders, you said, okay, I'll get one part here, I'll do another part there, and then I'll do another part somewhere down here. That's fine too. Either way works. The point is, you just have to know what it is you're doing. So I always recommend averaging in at the entry. This is not averaging in because you're losing. This is averaging in because you deliberately believe that you're not going to likely get it the exact price right at the entry. Now, this may not sound like a big deal, but it usually is one of the things that makes the difference between someone who actually succeeds and passing qualifications to become funded. So in other words, if you're, whether you're at a regular prop firm or you're, you're doing a funding program, which has, is more accessible. Whatever you're doing, one of the things that I've always noticed is that I don't know any professional traders, whether they're prop traders or they're fund managers, who just get in at one single price. They usually have multiple price targets to get in at. Now, most people are used to, I get in at one place, I have a stop loss, and I have 3 profit targets. It's more important to get the entry part right. It's more important to know where you should be entering first. And then, so in other words, you want to kind of invert your way of thinking. If you're used to doing, I enter at this point, I've got a stop loss here, and I've got 3 profit targets above, I would strongly advise you kind of rethink this and look at it from the entry perspective. That's more important to try to average your entry, because no one is ever going to know the exact price that they should get in at. Now, everybody's going to go back and tell their friends where they happen to pick the low of the day and they got in, or they sold the high or close to it. But let's be honest. The longer you do this, the more you're going to find that most of your entries are not going to be at the low when you buy and at the high when you sell. You're going to be somewhere in between. You're trying to consistently be in closer to the points where these transitional moves occur to move the stock up, or when they're peaking out to move the stock down. Okay, so averaging in makes more sense. Now, again, if you threw all your eggs in at the entry and then it starts to pull back and you're like, oh crap, it's not working out the way I want. Well, I don't want to take a loss. I'm going to put more money in. That's not the plan. The plan is, you know exactly how much in total you're going to risk to begin with. You've already calculated that. And then you just look at how you can spread that order out so that your average price is going to be reasonable. And of course, if things keep going the wrong way, then you get stopped out. Okay, so bottom line is, if this kept pushing down towards here, the first standard deviation, then at that point, you're going to have to get out. So like over here, let's say if this is what had happened over here instead of this, then that for certain would have been a good reason to get out, because it's pretty clear that it's not going anywhere. Especially after this move up and then it collapses, it's pretty much a done deal. At the entry at the beginning of the session, remember I mentioned that most stocks that move up pre-market, if they're strongly up, and this one was clearly strongly up pre-market, chances are you're going to get some sellers at the open. Why? Because they're people who already bought at the open, or before the open. They know that other people might buy at the open, so they want to sell their shares to them. It's a safer bet. So if you were in pre-market and you sold at the open, no problem. You're not the only one. All right, Bruce, you asked, because it faded at the open, you right away chose to buy lower because you were fairly certain it would run up. Yes, that is correct, Bruce. So I assumed it could fade. If you guys remember, I specifically said about 90% of the time, stocks that move up very strongly, emphasize very strongly pre-market. We're not talking about the stock is up 3% pre-market. That's not a big move. It's larger than average, but it's not a big move. This stock was up, I think, 40, 50%. I forget the exact number, but we can calculate it here. It had been up about 50% at the time that the bell rang. So I'm watching the stock climb pre-market. Then all of a sudden, bam, you get the bell. And what happens first? It's a fight. You have sellers and buyers just really just duking it out with each other, trying to figure out who's going to win. But if the stock's already up this percentage, and when it opens, if it's not really selling off, now I know my eyes, I guess, are better trained on this. This fade here to me didn't look scary. It just looked like maybe the stock might not be going anywhere at first. So you have to find out. There's no way of knowing until you find out. So a lot of times people will think that you want to skip these altogether and try to short them. Well, if you're going to short it, my experience is you'll see the fade start before the bell, and then once the market begins, it'll just sink like a rock, and then it'll start pushing through like the bottom of the first standard deviation, then keep trending. I would not assume because something fades at the open that it's going to keep fading. This is a critical error that a lot of people make. They just see whatever happens first and they assume that's what's going to happen all day. Well, you don't know. Just like if I see something start to move up at first, I don't feel more confident about it, whether it goes up or down initially, because I know the initial movement is going to be volatility most likely. You get some stocks that just start off right away and they don't do anything but go up. Okay, well, that's one of the reasons why you have to strike early. It's in that first few minutes that you have to make your choice. If you don't see any reason not to, you go ahead and take a stab at it. The key here is that you don't know if you're going to win or lose. And I say this stuff a lot, but I always think it doesn't sink in enough, that you don't want to think about things like, I got to know if this is going to be a winner. You don't know. So there's no point of thinking that way. You think, does this look like a scenario where something like that might happen? Is that the pattern that I'm seeing? If I'm not seeing anything that even remotely suggests, in other words, if this opened and it just went sideways, it ticked up a little bit, ticked down a little, then it starts to fade and fade and fade. Okay, I'm not feeling too good about that then, because if after the opening bell, if there's not even people fighting to push the stock up, okay, then maybe this isn't going anywhere. Okay. Or if it's pre-market, it starts to fade first. Maybe it's not going to go up. I'll wait and see if it turns around. Now, if you waited for the turnaround here, that's fine. But in this case, as I mentioned yesterday, you would have to take more immediate action and anticipate where the pullback is going to be at. And again, my guesstimate came from the fact that that was where, at the time, that first standard deviation was sitting. Okay, so it was right there. That was the same line we saw yesterday. Okay, so since it was sitting roughly there, I figured that probably it won't go all the way down. Why? Because that's the point. If you get all the way down to there, maybe it's not so good of a decision after all. Okay, so if that had happened, maybe might consider selling off some of those shares I already bought to reduce the risk, not necessarily getting out of all of it. So pull back, start to rise. That one actually traded almost exactly as what I anticipated. And then from there, it just shot up. Obviously, you're going to go past the high of that first 5 minutes. Eventually, we get up to here, start to hit that first standard deviation. The key is I see a lot of volatility in this move. So by the time you get over to here, you can kind of see things are starting to fade away. So they try to go up. You can see that the action is tapering off at the top. You can clearly see this is turning the corner, going around. Okay, doesn't mean it's going to keep going down. You never know, but this was at least some indication that the trend might be losing steam. So by the time this starts to fade away here, you should already be lightening up your position to begin with. And as it breaks down here, by this point, I would say you should know that it's time to flatten. Okay, only reason because it's not like this area where you had the big move up, you fade inside of that same move. You don't break out of it. You just pull back into the same range that last big breakout occurred. Then you go back up. Okay, but in this case, you got your consolidation right here. I made it a little wider than it should be at the top. It should be a little smaller, but actually, let me undo that. Oops. Let me just redo that one. So in this case, you got a really tight consolidation, not really going anywhere. Highs are getting lower. Even the last gasping move here could not get away. Starts to fade, so you already know by that point, maybe I should lighten up a little bit. No, I'm not looking at candlestick patterns, Bruce. I'm not, engulfments, dojis, nothing like that. I'm looking at the general picture. The reason why is simple. If I change this to a 3-minute setting, which I'll do right now, the candles are going to look slightly different. Still going to see the same areas of sideways trading as long as I give it enough time. But the point is, I see a large move up, which usually is fast. So if I go down to a smaller time setting, I'm still going to see that same candle. So I'm not looking at it as an engulfment or anything like that. I'm just looking at it as a general picture. And this is again going back to something I said before. You want to have a rough view of the market. In other words, I like to call it a fuzzier view of the chart. You don't want to see it exact. You don't want to be too precise about what you're looking at, because price movement is never going to be that precise. You're just trying to get a general idea of what's happening. So dojis, engulfments, things like that, they don't really say much. They can happen at key price areas, and they will mean something more there. But if you hang your hat on that, if I program the computer to say, hey, if there's an engulfment, show me. Nah, you're going to miss more stuff than you get. But if I just look for larger move versus tighter moves, that's easier. That's actually more likely to give me an accurate picture of what's going on. So I don't want to overanalyze it, nor do I want to ignore obvious things. So pull back, first run, pull back, second run, pull back, third wave, sideways, breakdown. Let me repeat that. First move is down, fade it, then bounce back, recovery. So that's move one, fade for a second. Notice you don't really break away from the general movement up. Like, you could consider the two candles to move up. You have three in the middle that are fading, but they're not going down that much compared to the first wave. Then you move up again, pull back, you move up again. Now, if anyone listening is about to ask the question, well, what percentage pullback? It doesn't matter. Just look at it. Don't start drawing Fibonacci levels and start saying, well, what percentage did that go down? Just trust me on this. You'll be wasting your time. The market will never be that well behaved that you can actually use that information to your advantage. Now, if something pulls back 90%, then if I put that as a percentage of a pullback from a high, of course, if it pulls back 90%, probably it's not going to recover. But what if it pulls back 49.2% and you were looking for a 50% retracement? Not going to help you that much, is it? Right? So fuzzy, right? Basically use the same way you can recognize an apple as an apple, even though they all have slightly different shapes, slightly different colors. The spots look different. They're different kinds of apples, but we all know what an apple is when we look at one. We're using fuzzy logic, so computers in the old days could not do that. These days they can. You keep showing a computer enough oranges, and if it has artificial intelligence, it'll eventually learn how to recognize what an orange is. This is why your Apple phone or your Android phone can look at your face, my face, and even if I have slightly more, beard, or I'm wearing a hat, or, my face is always going to look slightly different every day, it still can recognize me. Why? Because it's not looking that precisely. It has generalities that it's looking for, general combinations. Some things more precisely than others, like maybe, the distance between my eyeballs, or, my eyebrow to the, eyelid. These are things that probably they can be more precise about. Anyway, just getting a little off topic there. My point is, be fuzzier in the way you look at things. Don't be too precise. Okay, so this was the end. Now, when it came down below that first standard deviation, since we know there's a bullish inclination on this chart, we can realistically expect there may be some leftover buyers who still want to buy. So as it comes around and starts to go back up, and here is where you had your only second chance for an entry. A little late, but definitely doable. Okay, there it was. Now what gets my attention here is that it went below that first standard deviation. So I'm using this tool as a guide. This is not the only tool you could use. There are other things you could do as well, but you generally have to have something that's a measure of volatility. You need something that can show you when a move is far where a move is smaller. So think of it like baseball. You can know, everyone knows if the ball goes out of the park, literally out of the park, that's not normal. Like that's when, Mark McGwire, back in the day, or Sammy Sosa, that's like their sort of hit, or, maybe a Jose Canseco. I mean, this is a strong man's hit that will knock a ball all the way out the park, right? So you would know that a normal home run just gets over the fence. It's going to land somewhere, 20, 30 feet beyond the fence. And a grand, a smash, huge hit, it's going to be a lot bigger. And that's going to happen a lot less often. So we need some measure of volatility, something that tells us how big of a hit the stock has just taken relative to what it's been doing recently. We don't want to use the same volatility settings every day. In other words, you don't want to use what happened yesterday as a template of what's happening today, because today's a different day. Maybe the stock's moving in a smaller range. So as things start to consolidate, we had a long period here of smaller movement from compared to the beginning of the day. There was a lot more advancement. Now it's just kind of trickling around. Then it starts to come back through. Now, some people would jump in right when they see the crossover of this VWAP. I'm not one of them. Why? Because just because it gets there doesn't mean it's going to stay there. I'm expecting it to pull back to the VWAP because that's what the VWAP is. It's the benchmark average price. It's what most institutional traders are going to be using as a means to make their decisions. So when you get to here, naturally there are going to be some people that will sell because that's where they're supposed to be selling. They're supposed to sell if the market's already down. If it's below the VWAP, they're supposed to try to sell when it comes back to it. So maybe they'll sell. In this case, at first they did, then it comes out pretty clearly on this candle there. So that's the first time it's pretty obvious you had a sustained amount of movement. Now, in this case, we're seeing it on a 3-minute setting. If I go to a 5-minute setting, it's not going to look that much different. Notice that it's still there. Okay. So this was the first pullback, then it starts to go back up. Now in this case, it didn't go above the VWAP, but this case, on the 5-minute setting, we do see a pretty clear breakaway. Now, why would I see this as the same? Let's just go back. Since the VWAP is based upon the time settings in this case, not all VWAPs are. If you're using a VWAP that's a continuous calculation, like what you would see on Thinkorswim, which is actually what I'm more used to, you're always going to see the same number for the VWAP no matter what. This is an average VWAP over 21 periods. So this is basically the average volume weighted average price over the last 21 periods. So this one, I would say, generally is more useful for what we're doing here, because another VWAP, it would just always be far away from where the market is. I do like that when I'm doing certain types of trading, and I do also use it for day trading that way too, but the settings on this are slightly different because it's a little easier to manage. So anyway, so in this case, we don't see it drop below the first standard deviation until here. Then it starts to turn around, come back up, right? So first, you can see the recovery looks like it's going there, and then finally, boom, you get a push there. Doesn't have to cross the VWAP just as long as it's pushing up strongly from an area where it wasn't doing anything and it went below that first standard deviation. Is still fine. But it was short-lived. You only had a quick move up here, then that was it, right? So the truth is you would not have made much money off of this anyway, but that was your only second chance. Which brings up another point. Just because you have an entry doesn't mean it's going to work out really well. And the later it is in the day, the more likely the second entry, third entry possible is going to lose. We didn't really have anything after that. This little move up here just barely got inside. Everything kind of stayed on the lower side of the VWAP range. So this was a clear fadeaway. Now in this case, if you were, this stock is not easily shortable. It's not an easy to borrow stock, but if you had decided after this fadeaway here, right, which honestly this first one here I would consider to be the setup. And when it starts to break down, that would be a good indication that you're probably about to see a move down. So if you try shorting this as it starts to fade down here, I would say that's reasonable. You just have to get yourself out if it pulls back to that VWAP. But it didn't. It just stayed below that first standard deviation the whole time. Has minor pullbacks, but never really broke away back into the range. So if that were shortable, this right here, from here to here, would have been the setup of the trade. Notice I didn't say this is where you short. I'm saying you wait, you keep watching it, because it started to do that here, and then it failed, then it started to do it again. But this time, woof, you get a flush. So for whatever reason, the selling really kicked in here, and that set the wave of selling where it got almost back down to where our original lower entry point would have been. Okay, so that's a pretty clear walkthrough, I hope, of what you can look for. This is not the easiest stock setup to trade, by the way. This is harder. Now, the easier one was this guy. Now, this one, you would have had to have been listening right after the bell, because I mentioned it. Right after the bell, I spotted this guy moving at the same time we were watching GCT. Now, this one is much easier because the first part of the move, if you took your initial entry and said, okay, I'm going to spread my order out. Okay, I'm going to have a low entry and a high entry, meaning that I'm going to have one entry point that's probably going to be at the highest I want to enter. So you might have been in somewhere around here. Okay, you're not going to be in here. That'd be wishful thinking. But this one was moving pre-market as well. So this is probably right about here is where you would have ended up getting in, probably. Actually, maybe lower than that. Sorry, it actually would have been lower than that. It would have been right about where it closed, right about there. That would have been entry number one. Now your second potential entry would have been a move back, not down to exactly here. That's 1142. Now this is where I'm just eyeballing how far it moved and trying to guess. There was a low which may not have been visible at the time. It may not have faded enough at the time to see that low. But I'm guessing that low probably appeared pretty quickly. So we could look somewhere in between that low and here. Again, this is just a rough guess. So I'll say 1165 roughly is where your second order would have been. Again, there's no way to be but so precise. So you just generally have an idea of where you want to get in at. So you got your high entry, your low entry. And then your average fill would be somewhere in between. So it'd be right about there. Right? So that would be your average fill if both sides got hit. So there's where you'd be, sitting at your average entry. Now from there, what are you looking for? Exactly what happened. Nice move up. Now let's say you got in, or you saw this later. Let's say it was around here. Well, as soon as it starts to, you don't even have to wait. It's early enough. You're in the first 10 minutes and you're trading in the same range as the first 5 minutes. So if you decide to say, all right, well, I start to watch somewhere around here. Okay, I'll get my first entry right there. So a little bit lower than would have been over here. I'll still look for my average second entry somewhere down here. Maybe it's going to fade, maybe it's not. But you don't have to wait for an actual breakout. This is another thing that I've noticed people do where they won't do anything until the stock has fully broken away. As long as the market's established a clear range already, you don't really have to wait unless things were going down. If they were trending down, then that's when you might want to wait until it turns around. You might. So a lot of cases it is better to do that, but in my opinion, day trading usually, if the opening looks fairly clear that there's a range it doesn't want to go lower then the fact that it's sliding a little lower doesn't make much of a difference. It's only if you're really trending lower for a while, like maybe like this, that's where I'd be a little concerned about buying in, because it doesn't look like this thing wants to go up. It looks like it wants to go down, right? So anyway, going back to here, if you look over at the move, so it starts to move here, that's the first real wave up. This one is unbroken, it doesn't stop. So if the question is, well, could you get in here or here? My answer is you could, but you probably don't want to. And if you did get in at the top, make sure you're getting in with a smaller position than you normally would take. So in other words, if you're going to risk $600 on a typical trade, then if you're getting in up here, still early in the move, but if you're getting in up here, probably want to risk a third of that because you're getting in a little late. You try to get in at the time where a lot of people are going to be worried about getting in. In other words, where people are going to feel a little nervous and unsettled, like, I don't know if I want to get in, I'm not sure. That's exactly when the professional strikes. Everybody else is going to wait until something is abundantly clearly going up, and they're going to all get in late. There's a reason why most mutual fund money back in the 90s, during that big bull market, most of the money came in right at the top. Literally true. Most of the fund managers got the majority of funds allocated to their funds right at the end. Took years for people to finally catch on, right? Unless they were already parked in the market anyway, then those people, they're already there, so it wasn't a big deal. But for people that were newer, it took the market basically going sky high before they got in. This is a common theme. Most people will make the decision to get in exactly when the trend is getting towards its end. So notice that the volume down here is the biggest in the last two candles up. Then it stops. Notice then the volume comes down. Let me just show you this again so this is crystal clear. First part of the move, biggest volume, that's the open, that's normal. Then it fades, the volume comes down, right? Then all of a sudden, right here, you get this big volume spike, right? Notice that the biggest candle of volume is at the top, the one that was at the peak. Then all of a sudden it fades away. Then it picks up again. Notice that again, the biggest candle is at the biggest volume candle is again at the peak. Then it fades again. Now, of course, if you're thinking, this is a great strategy if I just watch the volume, I'm just going to point out something. You don't know when the volume peaks until it already has, just like you don't know when the market's topped until it already has. What I'm just saying is, this is evidence of something that I already know, that I think you guys should know too, that most of the buying, most of the interest comes in right at the end of the move. And then once that's done, what essentially happens is everybody who didn't buy yet, but wanted to buy, floods in at the last second. Then there's not enough people left to keep buying to keep the movement going up. You start to see sellers come in. Of course, who are the sellers? The people who bought down here, or maybe even before it got there. They're the ones that start to sell, right? So maybe they are watching to see, the volume's really dropping off. Okay, let me sell. I'm not going to watch that. I'm just pointing out that usually that's an indication that you've seen the end of the wave. You don't know if it's going to keep going. So if you held through this entire period here, that's fine. There's nothing wrong with that. Okay, you don't have to be out at the top. As I mentioned, you're not likely to get out the top anyway. You're probably going to get out somewhere in between the top and the bottom. So you're trying to get it out as close to the top as you can, but you'll never know exactly where the top is until it's already over. So there's our consolidation. If you decide to lighten up, I'll go over that in just a second, Poppy. If you decide to lighten up during this move here, no problem. That's perfectly fine. You just kind of reduce some of your exposure. Maybe get half of your shares out the market, see what happens next, but then you get your last move here. Okay. If you were coming to the party late, you did have a second chance to get in right there as it became pretty clear the market's trying to go up. If you parked a new order in the middle of this range and waited, you could do that too. I usually like to see at least some indication that things want to go up first. You can see the VWAP is actually moving up by that point, so that's good. So anytime in these two candles, if you decided to take a chance that maybe it's going to go up, that's no problem, okay? But I will wait until the movement starts. But that was it. Once it went up, it faded, made a second attempt to continue, failed miserably. That's an engulfment if I ever saw one. Not that I watched those, but that one's pretty obvious. Then we just go flat, wait, and then boom, sells off, just like the other one. Notice that these are fading in the same fashion, right? GCT and this both faded away in the exact same way. All right, so let's delete, let me delete these drawings, but hopefully that helps, guys, to help you visualize. By the way, if you were trading at the end of a day, I don't try things like this at the end of a day. That's not really me. Later on, when we start doing the broadcast during the regular part of the session, which will happen this month, I'll show you what to do at the end of the day. You know, if there is anything. Usually there's not much. All right, so Poppy, you mentioned one of the pre-market criteria you watch is for volume. This is correct. Is there a minimum volume or volume percentage you look for? I like to see hundreds of thousands of shares trading, and I prefer to be on a stock that doesn't normally trade hundreds of thousands of shares. One of the scans that I've created, you know, I do program things, and one of the things I've created that's not on this platform, it might be on there later, but that takes a while to develop things. So I've got a bunch of programs that I run. Some of you might be familiar with, you know, things like, you know, the point is you can use various platforms, you can program them. So, you know, retail platforms like Thinkorswim or TradeStation or NinjaTrader, you can actually program them. So I like to develop stuff in those environments. One of the scans I look for, basically, Poppy does this. It just says, do you have an extremely large increase in volume? So large. And this is the one that might help you, Poppy, if you scan for this. Scan for a stock that's already trading 70 to 80% of the amount of volume that it typically trades in an average normal session. So in other words, take the 50-day average volume of a stock for its intraday period only. It's day. What does it typically trade for a day? So let's say that number is 500,000 shares a day, which is not a heavily traded stock. Then let's suppose you look at a stock, and that stock that normally trades 500,000 shares a day is currently trading 5 million. That's exactly what happened to GCT. It was trading way more volume in the pre-market than it ever trades during the day. This is, if you look over here, these little blotchy small candles, that's it normally during the day. You don't get a lot of volume at all. But you get to this day and all of a sudden it's trading massive volume. If I make this into a one-day view, let's look at the volume here. Volume, 116,975 for that day, the first. For the second, the volume, 112,784. Volume, 72,000. Volume, 167,000. On this day, volume is, there it is, 32,964,313. In other words, you couldn't miss this one. It stood out so much. So if you look for the pre-market, which is where I'm looking here, right? I've got my list already, and I also pull stocks off of other lists. You see right there, HUDI, currently trading 999,582 shares. Okay, so let's just take a look at that guy. See what it normally looks like. Okay, the first it traded, First it traded 78,000 shares that day. It traded 203,000 shares that day. And of course, this was a big day. It traded 2.6 million shares. This day it traded 1.2 million shares. The volume's clearly up. And now we're currently trading, as of the 7th, we were trading about 5 million shares. So this one is already active. So we're just seeing a continuation of the same thing. The only question I have about this stock is it up? And it is. HUDI is currently trading at $18.10 after closing yesterday at $15.81. So now this guy is on the radar. Why? Because it's already trading vastly more volume than it normally would, and it's up sharply. So we have two good reasons to trade this now. So we're going to look and see what this does at the open. Now, so far, pre-market, it's already up. We can see that. It's up 16.7%. It's just a matter of whether it continues to move after that. Okay, I'm going to have to rocket through here so I can get some stocks on the list. I'm just going to point out some stocks that had some pretty good movement yesterday, and let's see what they're doing now. All right, ARQQ. That's it. Big mover yesterday, 4 million shares. This one showed up a little later in the day. Just going to add that to our radar. I don't think it's doing much right now. Actually, I think that was already on the radar. Yeah, it's not doing anything right now. Pre-market, I don't see much. Not a lot of bids and offers flashing. This one doesn't look active pre-market, so not going to add it to our. I'm not going to add it to our list of stocks to watch at the open. I'll just keep it in there. The reason I'm not adding it is just because I had good movement yesterday. If it's not looking like it's active pre-market, then I don't think it's worth paying attention to until it does. All right. Next up, TSHA. 322,000 shares. That looks about normal for this stock. It doesn't. It usually trades in the millions. So I would say even though this one's trading decent amount of volume pre-market, it doesn't appear like it's on any serious trajectory. It did have earnings, so it's up off of earnings, but I should be truthfully, Poppy, I like to see in the millions of shares. If not, it's got to be close to that. So a few 100,000 is not going to get my attention, but if I'm seeing millions of shares or many hundreds of thousands of shares on a stock that normally doesn't do that, that gets my attention. All right, VERU looks like it's going to open roughly where it closed yesterday. Ask is at 14.98. Yesterday it closed at 14.44. It's not much of a difference, not a lot of action pre-market, so I'm not going to add this to our list of things to look at the bell for that reason. And going down my list, doesn't look like much is really moving. Let me just see. All right, Apple doesn't count because Apple always trades high volume. 2.5 million shares pre-market for Apple is nothing. If it were trading 25 million shares pre-market, then you better be watching. And that just comes down to your experience. This is one of the reasons I don't give an exact volume number because it's relative to the stock. But I do know that if anything's happening, it should be in the high hundreds of thousands or more of shares. That would be the only way to know that something significant's going on. So for example, your SoFi, only 325,000 shares. Looks fairly normal. Doesn't really catch my attention. Bed Bath & Beyond, only 100,000 shares, not much going on there. Moving on, Cisco, that's normal volume for it. Let me check, maybe I don't think that's unusual. No. Pretty normal. Nothing going on there, nothing special. All right, so now I'm just going to look at stocks that are moving down just to see if anything gets my attention. Lyft is down, wow, 17%. What happened there? Oh, earnings. Yeah, earnings. Clobbered it. I'll put Lyft on the radar because it is a major stock that just came out of earnings and it's down a good amount. So there might be some people wanting to buy that at the open. I repeat, there might be people wanting to buy Lyft at the open. It is a stock that is heavily followed. I wouldn't look for a fade. I wouldn't look for a short on this. I would look for a buy if it looks like it's going to go up. If it doesn't, you can short it, but it's probably going to be a very slow move down. That's not really going to be worth the time holding. All right, nothing. Sorry, why did I click on that? DWAC, this is another one that I mentioned yesterday. This one, briefly, let me just walk you through what happened. I did mention we should watch this at the open. Let me go to a 5-minute view. This one also did a fade first and then a rally second. I did mention to keep an eye on this. It didn't look like it wanted to go anywhere at first, but it did eventually really start to move. So whether it was here that you decide to take your chance or here, either way, it really started to move. If you got in at the open, that's fine too. If you averaged in basically between here, roughly here, oops, you'd be average roughly here down to maybe the bottom of this rectangle. Well, actually, you could go lower than that. You can go down to roughly here. So if you average down in there, between here and here, that's fine. Didn't even go down that far, it just went sideways and went up. So in this case, you wouldn't have had much of an average down. Then it took off, and then you had your third move here. That was the last major breakaway move, and then it just flew. Now, remember, I did mention this one, so hopefully some of you caught that, but it's going to be on the radar again today. Okay. Okay, so this was one of the ones I mentioned for sure yesterday. So hopefully some of you caught that. This was the I think the Trump one, former President Trump's. Let's see, was that the one? Yeah, that was it, right? So it took its time, but it did eventually move. But at the beginning, for the first, I don't know, almost for the first half hour, you got nothing, and then all of a sudden it started to move after that. Okay, so that one turned out to be a monster mover. Just took a while to set up. So hopefully you're watching that. Also, another one that moved yesterday that is already on our list is SONN. SONN. There it is. It did have a nice break to the upside yesterday. If I didn't mention this at the open because it took a while to even show up, but there were a lot better options by the time this showed up that we already would have seen. So this one, it was possible to trade it, but it was very rough. The range was very small, but there was a possibility there you might have been able to catch something after the first break. But if you skip this one, I don't blame you, because looking at the action here, it's a little rough. It looked a little better on a 1 minute chart. It would have been easier to read, but yeah, this one wasn't that clean of a move. All right, so DWAC is back on the radar. Lift is on the radar for a possible rebound. Let's see, anything else? Not really. Okay, not really seeing much else here. All right, so I'm going to go to my normal settings, looking at the stocks that are on the move up. And let me look through some stocks that are showing up pre-market on my other scans just to see if they look interesting. TripAdvisor is on the radar. This one's down quite a bit. It's currently down, what's the percentage? Let me add this to here. This is down quite a bit. TripAdvisor is currently down 19%. Look for a potential recovery bounce there. What's the volume pre-market, Poppy, on that one? I didn't see it anywhere on the radar of things that are active. Now that one looks very low volume, not much is happening. I would skip it. It moved yesterday, but there's not much volume in that stock. So that's not really what I want. I want something that's got more people trading it. So if I put that on the screen here, it's up, but what this doesn't really show you is how jumpy or blotchy this is. So not really what I'm looking for, so I like things that have a little more continuity in their price movement. So that one I would skip. Too low volume. Probably something that maybe, there are a lot of trading services out there that broadcast for low volume stocks because they're easy to move. You get your followers to buy them. But, well, what's the volume pre-market? Giacomo, what's the Giacomo. I said GN. What's the pre-market volume on that? How many shares is it traded this morning before the bell? I'm looking through some stocks, guys, as I'm talking, so just bear with me. That doesn't, okay. This stock, okay, I see one that I'm debating in my mind if I even want to put this in front of you guys. All right, I'm going to put it in front of you guys. It's not that pretty, but it does seem to have some volume. HIMS. This guy just came off of earnings, and it does have a better profile volume of activity. It's not ideal. It's right on the cusp of what I would accept, but it just came off of earnings. It's up sharply. I can see there's some pre-market action there, so I'll put that up. I'll check out what was the one you put in there? SEDG. Okay, and I don't know if that's even on the list. Actually, no, sorry, take that back. Forget about HIMS. That's not a. 1 second, guys. I'm deleting that last post if I can. Oh, come on. I won't let me skip that one. All right, never mind. Crap. All right, so skip HIMS because that's not a NASDAQ stock. Sorry, it came up on my scanner, but I thought it was a NASDAQ stock. All right, so SEDG. Wow, that's an expensive stock. That's a little higher price too, so you're not likely to get any serious movement. It is up after earnings, but this one I would just say I won't put that on our radar. It does look fairly active, so I'll give it that. After earnings, it's up quite a bit, but this one's going to be harder to make any money off of it because of its price tag. So it's over $200. That's going to be a tough one to trade. I'm not even sure if this is hard to borrow or easy to borrow. All right, I'll skip that one. SEDG. I'm looking at another chart, another screen. There's a lot of gaps in the chart. That's not a good sign. That means if you get in, you're going to be at the mercy of the bid-ask spread. So you're going to buy in at a high price, and when you get out, you're going to get out at the wrong price. So I prefer things that are a little more fluid in their trading behavior. That one's a little too choppy for me as far as the distance between one bar and the next there. In other words, if you have large gaps that are not filled between bars on the chart, that means there's not a lot of continuity in the trading activity, which means that the stock is probably going to be hard to trade. And I don't like hard to trade. I like easy to trade. So, all right. I do see another stock here that might be interesting, but it's not a NASDAQ stock, and it also is very low priced. So I'm going to skip that one. Yeah. So for the most part, I don't really see much of interest today. Yeah. Yeah. Some other stocks may come up after the bell. But as of right now, I don't see anything that looks all that interesting other than what we've already put up on the radar. So I think we're good to go on our pre-market list. So let's just watch what we got and go from there. All right, bell rings in 4 minutes. I will watch it at the open. As of this moment, the two stocks that I would watch the closest would be HUDI and LYFT Lift. Those two. DWAC would also be something to keep on the radar. I do prefer lower price, yes, because higher price stocks generally don't change in percentage value that much. So think about it like this: you take $10,000 and you put it into a more expensive stock. The expensive stock may move a significant amount in dollars, but percentage wise, that's really what's going to affect your dollars that you invest. So if I've got a stock that moves 1% a day and I've got $100,000 in it and I capture all of its movement, I make 1%. If I've got another stock that can move 5% in a day and it costs less, then I'll do that. I'm just looking for what's likely to give me the better gain. That doesn't mean that I'm going to go to the extreme and trade really cheap stocks like 50 cents, etc. I don't touch those because once they get too inexpensive, you're actually going to be more exposed to negative movements. In other words, a lot of those stocks will move 10 cents up or down, and you got to leverage a lot of shares to be in it. So that's not really what we're looking for either. So generally speaking, the price range I'm sticking to is generally $3 a share at the lowest end to maybe just over $100 a share at the highest end. I'm usually between $3 and about $50 a share. That's usually the prime real estate for this. All right, so HUDI and Lyft and maybe TripAdvisor too are probably going to be the movers out of the gate. So I'm going to watch here. I'm most likely just going to look at Lyft first because I want to see if it actually starts to recover right from the gate. Okay, so Lyft, we just want to see if it bounces back after it's been sold off. And I'll simultaneously have HUDI on another screen so I can see both of them at the open. So far, DWAC is down pre-market, but I still think it's worth considering since there might be some follow-through buyers coming in. The lift so far looks like it's trying to go back up. And HUDI, although it's trading significant volume, it does not look like it wants to go up right now. All right, let me zoom into Lyft. So far looking positive. Now, I'll wait a second to see if it really starts to run. Like I said, HUDI doesn't look like it's doing much, so I'm going to pay more attention to a few other stocks. So DWAC doesn't look like it's doing much yet. So we'll go back to that later. TripAdvisor is currently going down, which is a little surprising. All right, so far I don't see any great movement. Most of these stocks seem to be selling off. LPSN, Array, etc. These are not trading much volume. Okay, this one looks like it's gaining some momentum. FIVN. Oh yeah, that one's moving. This guy is moving. All right, so let's see what we can do potentially with that. Okay, that's after earnings too, so that's pretty clear. Okay, this one is going to be a little hard to get into because it's already way up, and I would not recommend buying it right now after it's been up that much. I may be missing out on the whole thing, but this is a pretty wide spread between the bid and the ask. Well, sometimes it is. Right now it's 50 cents. That's a pretty good sized bid ask spread. So this guy, if it pulls back down to the top of the volume weighted average price, first standard deviation up, I would look for an entry there, which is currently somewhere around $49 or so. So it's got to pull back quite a bit. But this one's definitely on the radar now. Okay, you got to wait for a pullback on that. Don't try to get in. I found that just by looking at the volume, seeing what's really moving. Okay, VERU looks like it's attempting to continue yesterday's activity. So far it has not, but I would say now it's back on the radar. Okay, so that one's back on the radar. Let's go to, let me go back to Lyft and see what we're doing. Lyft is not doing anything so far. TripAdvisor looks like that one clearly is on the rebound. Okay, so Trip looks like it's on the rebound for sure. And VERU looks like it's attempting to make a move, but hasn't so far. All right, I would say Trip is probably a safe bet as a potential rebound. Let me just look at the NASDAQ really quick. NASDAQ is fading pretty strongly at the open. It's selling off. So Trip is holding up. So let's just, this one I would say right where it is now, you could buy your first part of the trade. The second part, in this case, you just have to have your second order sitting just a little bit below the low. This is not going to be the easiest one to figure out where to stop yourself out. Just I'll fairly warn you. But for right now, you can take the chance on that one. But the key is the NASDAQ is fading, so if this one keeps fading as well, then basically just get out and call it a day. So far it looks like it's able to hold. So I would look at that one as this one's the only one right now looks like it's got any chance of sustaining itself. We'll see if that's going to succeed or not. Lyft so far really not clear. It's just kind of holding its ground, so I still think Lyft is in play, but we got to wait and see if it starts to look a little better. Let's see, Array. Okay, that one's gapped higher. It's not trading a lot of volume, so I'll have to skip that one. And let's go back to HUDI. That one's still falling. Okay, so Trip, I would put a second entry just below the low of the open. And, basically expect the market to pull back to that. And then if it's going to go up, it should turn right back around, start to rally. So that would be your best play at the moment, TripAdvisor. There are some other stocks that I see that are moving, but they're kind of small. All right, there are some percent gain movers that are showing up on, if you look at a NASDAQ percent gainer scan, there are a few stocks that are coming up. I'm just scrolling through them right now. Another screen. don't really see anything yet that looks like it's trading really high volume. So I'll skip that. So far, don't see anything really strong on the list of NASDAQ percent gainers. All right, so TRIP looks like it is starting to bounce back. All right, I missed FIVN. Did that pull back? No, it hasn't. Okay, so this one, I don't know. This one, I'm warning, don't try to get in when it's this high up. I mean, it may keep going, but for the most part, this one, if we caught it right at the bell, we would have had a chance up until 49 or so. Now it's too late, so this guy's already too far gone for us to really be able to get in. So, oh well. I would not try to get in now. Just see if it can pull back and then do a recovery on that one. TRIP, on the other hand, still looks like we've got a shot there, but it is hesitating a bit, so it does concern me. So FIVN looks like the strongest contender for the day, but it's already pretty far up. NASDAQ looks like it's finding some support overall where it is now, so it probably can rebound. We'll see. Currently, FIVN is the best mover. And TripAdvisor looks like it's trying to go, but so far it hasn't been able to keep going. NASDAQ is now bouncing back up, so probably Trip is going to do the same. All right. So if you got TripAdvisor, just hold it. You have your second buy-in point, which would be around $18 a share. If it gets down there, that'll put your average fill right in the center of the action, and then you'll look for it to go up. Obviously, don't risk more than the distance from your average price to about the high of the. I wouldn't risk more below the low than the distance from your average price to the high of the day. You know, so it looks like it's fading right now for Trip, but again, that probably is going to follow what the NASDAQ is doing, which now is going back down. So far Trip has been able to fight. This FIVN, man, just a runaway train at the moment. So if you can find an entry into this, go right ahead. But as of right now, this is a little too high for my taste. So if you didn't catch at the open, probably it's too late. All right. All we know is this trend is going to end at some point. We just don't know where. Now, if it pulls, wow, there's a pullback. There's finally one. If it really pulls back hard, my guess is that it's going to come down to 50, which 50.20, which is right around where the VWAP is. So somewhere down to here. So the pullback should take it down deep into the $50 range. And then if it looks like it's still trying to go back up after that, then you can take your chance then. Okay, but we can wait. This one doesn't look like it's going to run. All right, guys, so TripAdvisor is almost at the lower potential buy-in point. I do think they're going to move this to the low of the open and then see if there's any people to buy down there. But other than that, that is it. So not the best day as far as opportunities go. Most things seem to be falling apart. Short opportunities, not really. Let me see, Mara. No, actually, that's not a bad short opportunity. Pretty clean chart. Yeah, you might have some better luck today looking for shorts. Mara, well, it's too late now, but Mara looks like it's on a decent trend down. But I wouldn't expect stocks to keep moving much after the open to the downside. So usually for short selling, if you don't catch it at the open, that's usually the only time you got a real chance, unless the situation is really bad. But we'll see. All right, let's go back to what's moving up. All right, folks. I gotta depart here, but have a great session. Once we've got the live market broadcast going, which will be at the time you guys get your platforms, then we'll go from there. But until then, I'll just do my pre-market, and then we move on. Okay. So trade well today, folks, and I'll see you guys tomorrow for tomorrow's broadcast. Take care.